And Mike and Tariq, if you guys can hear me.
I can hear you.
Great. So the only other thing is when you're not talking, we just want to be muted because we noticed last time sometimes we were getting some backfeed. So just if you're not talking, mute it, and that will save any issues.
Understood.
All right.
Cool.
That is just the turn audio on off button on the top.
Yep. The blue one that looks like a microphone.
Yeah. Okay. I'm going to step away for a minute and I'll be right back.
All right. And I'm just going to try and.
Good evening, everyone. It's about 1 minute past 6 now. We're just going to hang tight for a few more minutes, give everyone an opportunity to join for this webinar, and then we'll get started.
All right, guys. So welcome to our second of office hours, or our November office hour. I'm your host again, Dan Cosgrove, Chief Marketing Officer over here at Anthem Capital. I've got my partners here, Tariq and Ivan, along with a special guest, Mike, who will introduce himself here very shortly. Tonight's topic or focus area is going to be on the types of questions you want to ask in regards to the property management company. They're a very important element in ultimate success or failure of the asset that you are investing in. So thank you to everybody that sent us questions in advance. It did allow for us to kind of build out the proper structure and flow and blend some questions together as they came in. So let's jump right into it because we want to be respectful of the fact that it is just 1 hour. Once again, if we do not answer all of the questions, we will circle back with you individually on anything outstanding. If you do have questions that come through, you can message it to me directly in the chat. And if we get through the questions that have already been asked of us, we can answer those as well. So with that, I'm going to pop up just our deck that covers some of those questions, and then I'll take them down so you can actually see people respond properly to it. So without further ado, here we go. Okay. So the first thing I want to do is introduce you to Mike. Mike, please go ahead.
Hi, my name is Mike Napavanis. I'm the president and principal of the Orion Property Group. We, we are a regional and almost a national company. We have property all across the United States, but we particularly just manage. Like I said, there's only 12 in the state of Kansas, and we're one of them. We have over 5,000 units. We are one of the few management companies that continues to grow month by month. My background is that I've been on the board of directors of the Heartland Apartment Association, the Kansas City Apartment Association, and I work with several different brokerage companies all across the United States. Another thing that's something the Orion Property Group has that almost no other management company has is that we actually have a very active brokerage department. So we understand what the brokers are talking about. We know how to read the financials. We know how, we understand the sales packages, and we have tons of experience managing properties in different markets.
Awesome. Thanks, Mike. I appreciate you joining us here tonight because it's always nice to really see things through a separate lens. So I know a lot of the questions that were asked to us was from a kind of a sponsorship team. How do we answer it? But as we go through this, we'd love your color commentary on how a property management team would also look at the same question. And maybe it's a different answer to what we're providing on the other end as a sponsorship team. So with that, let's hop into the first question that came through. And my apologies on it's a little slow, but the first question that generally comes through is, how did the sponsor source the property management company, and has the sponsor spoken with any references concerning that property management company? Who wants to take the first crack at that one?
I will start with that one, Dan. Tariq Settar here. With reference to the property management company and how do we go about finding one, we go through a lot of effort and energy that we spend into just understanding the property management company. And a lot of that has come from our experiences and tough lessons learned from some tough experiences that we have had over the years. So very detailed, thorough questions that we go through. Reference checks is definitely a big part of it. Talking to a lot of the current clients especially in the market that the property is in. We have had painful experiences where we started with a property management company that was experienced in another market and wanted to expand into a market that we were buying a property in, and we started with them, and several months into it stepped away and transitioned to a different one, and learned some tough lessons in that process. But having a background check, reference check, talking to the current clients, talking to the current lenders of the companies that the property management company is managing, and maybe talking to some of the vendors that the property management company works with on some of the properties that they manage. So all of those things are important, and we go through all of those checks as we go through identifying and shortlisting a property management company that we are going to be working with.
Awesome, Matt. Thanks for that, Tariq. And Mike, not sure if you have any perspective coming from your side of the aisle as well. And looks like we just lost Mike. he had some bad connection, or maybe he's running away from the questions.
It's pretty much.
Yeah. Okay. So we're going to hop to the next question, knowing that.
No.
Oh, Mike, you're back.
Am I back?
Mike, I tell you what, it's a little bit choppy.
So, all right, I've got a really bad.
Guys, this is going live. So, tell you what, Mike.
I'm actually traveling.
Yeah.
But,
Mike, maybe what we can do is we can do a side recording of your answers to these things, and we can tape that onto the back end when you have better service, because it looks like technology is not your friend today, since I know you're traveling and in a
sorry about that. I just don't have connection.
Yeah, completely understand.
Just try to get things to connect.
Yeah. So once we think it's in a better shape, we'll pull you in for more questions. But let's get back to the next question then, until you're feeling in better position from an internet standpoint. So let's go ahead to the next question. Has a sponsor worked with the property management company before? Tariq, I think you just hit on this one, but anything additional you want to provide in addition to what you just said on the prior slide?
Right. So, when we go into a particular market, we may not have a prior pre-existing relationship with the property management company, but as I said, on reference, by way of reference checks or working with other sponsors that we might know that have a presence in that particular market or even in that sub-market, working with them and getting their view of how their experience has been over time is very, very important. So, it's not always that you're going to have a pre-existing relationship and prior experience with the property management company, but again, talking to those that have been working with them for some extended period of time is what is critical in that piece, just to make sure that you have an understanding of how the processes work at the property management company, some of the back-end processes, and I'm sure Ivan will hit on some of those later on. But those are critical to get an understanding of how the various processes are set up at the property management company.
Yeah, that's definitely helpful, Tariq. And I think there's a question that was going to come right up after that, and it ties very nicely to this again of, have they ever experienced managing through a recession? And I think that question is popping up to a lot of investors' minds purely based on the fact of we're either in a recession or entering recession. So
again, can
why
you
is
hear
that
me
an
okay
important
now?
thing for people to be able to figure out how that property management company, if they're operating with efficiency in good and bad times?
Right. That is right, Mike. Yes, we do hear you better now. Did you want to chime in?
Yeah, well, I was just going to jump on that. Going back to the first question, jumping on what Tariq had been saying is that we actually vet our customers. We have learned through trial and error the problems of picking up the wrong client just for the sake of having the business. And our company is large enough. We have a good enough reputation where we can actually push back and say, no, we don't feel you have the financial backing to support this property. We will go out and visit the property because we see ourselves as being partners with the owners, with the investors, the whole team, because we all have to work together. And if I see any problems, whether financially or just personality wise, how their properties are operating now, how they're, how do they take care of them means a lot. So it makes our management life easier. And when it comes to a recession, I can tell you that I've been through 2 recessions. So I've been through there. I've seen the ups and downs. And what we always see is like every time there's a recession, we see more and more of our competitors vanishing because they're not strong enough. They're not built for this. And with this next recession that we all feel is going to happen here soon, I can see a lot of these smaller management companies that have less than 1,000 units are not going to survive. And those investors are going to be coming to us. Actually, here in Kansas City, there's a small company that we are actually picking up a lot of their business because that company cannot support their staff with the management portfolio that they have. And another thing, too, when it comes to management companies, you've got to make sure they've got a good reputation where they can hire good staff. Every industry right now has got a problem hiring people. And if you don't have a good enough name in whatever markets you're in, you are not going to find the quality employees that will work for you and also do a good job at the property.
Mike, that's really good perspective. And I guess a follow-up question to what you just had there of, you mentioned groups that might only have 1,000 units or less and how they might very well go under. Is there a financial number we could peg to it of like financial occupancy drops by 10, 15% at those types of assets where the property management team may be going under? Or is there any kind of rough numbers that could track against it?
There really isn't a particular number. It just depends on what kind of debt this property has. Depends, the condition of the property. What's the status of the property? What's the condition? Are they going through a renovation? Are the investors and owners and development team have enough financials that they can support this property? Again, learning through trial and error and previous recessions, we know what to look for. I mean, they've got to have the net worth. They've got to have a strong sponsor. The property's got to be in good shape and in a good area. All of us that have been in real estate, we've all made real estate mistakes. And I know there's a lot of people on here. If you have a major first real estate, mistake, it's going to happen sometime. And you learn from that. You never learn from the good deals. You learn from the bad deals. And, Dan, it's really a trick question because you really can't tell with this property. I mean, I've had properties that are in A markets just completely implode. Because of partnership issues. And then I've had other properties in bad areas that do very well because they were financially strong and went through the recession and everything. So it just varies.
No, that's great. Thank you for that. I will pop up to the next question just so people can kind of track, and then I'll take it right back down. But the next one, once it's sharing, is it's a property management company, local, regional, or national manager. Who wants to take that one?
I think I'll tackle that one as well, Dan. We have worked with companies that are, regional, national, and even local. At the end of the day, I don't think it matters, what size, regional, national, local, what size they are. I think what matters more is a couple of things. One, the processes, the standard operating procedures that they have put in place, which they train their staff through to make sure those are followed. I think that is important. And then irrespective of their footprint of the property management company, at the end of the day, if you have an asset in a particular submarket, it is their knowledge and grasp of that particular submarket that matters to you. It does not matter where else they are, what are the markets they are in, how large a company they are, how many units they're managing. What matters is how good they are, how knowledgeable they are about the particular submarket that your property is in. And that is really going to help, you either be a success or a failure in that particular acquisition, in that particular investment. The staff is going to be local, the tenants are going to be local, the competition is going to be local. Any changes that might be happening in that particular submarket, those are all local elements that the company has to be knowledgeable, that the staff has to be knowledgeable about for it to be a successful venture.
Okay. Yeah, that's that. I mean, thank you for that, Tariq. Mike, I'm not sure if you have any thoughts on your side.
I would definitely have to agree with Tariq. I mean, they have to have boots on the ground. You can't manage a property behind a computer screen and look at all the reports and everything. You need to be there on site to inspect the units. And just like the development team we're dealing with on the 2 assets in Kansas City, they're definitely hands-on. They're definitely on the property, so everyone knows what's going on. And that's really appreciative, from the management company's point of view, so you can see what we're doing. You also see the problems that may come up and also the potential upside.
Yeah, that's great. That's great. I'm going to hop right into the next one because I know we're already 20 minutes through, so I do want to keep pace with all the questions that came in. So the next one is, what are their current assets under management in the area and how are they performing? I know that's going to be definitely important because you could be a rock star in one market and not a rock star in another market. So who wants to take that one?
I can take that one. Our assets overall are trending right there in the mid 90s, about 95%. But we have some properties that are a little bit less. We have one property in Lawrence, Kansas that's going through a renovation. We have 25% of the units going under renovation. We're about to get 10% of those units back to us. So it really comes down to, again, the management company. Do they know what they're doing? And is the development team part of the whole decision-making process? We have several thousand units in the Kansas City area across the United States. We have several thousand more. But every property is just a little bit different. But it's really important that when you're looking at a management company, check out their portfolio, check out their website and see what they've got going on. Definitely ask for references because they need to have a presence, and you want to see what properties are going to bring them down.
Yeah, absolutely. I'll chime in here on this question as well. Tariq already mentioned this, but multifamily is hyper-local. Everything's hyper-local. You have to understand how to operate that property at the hyper-local level, which may be, in some cases, half-mile, 1 mile radius surrounding that property. And then beyond that, everything changes. The demographic changes, everything flips. So as Mike's alluded to, I mean, they're very in tune with Kansas City market, where they manage a couple of our properties up there. But the properties they're managing is different than some of the other properties they're managing in other areas of the market. So we go and take a look at the properties that they're managing in the submarkets that we're buying in to make sure they have a clear understanding, which of course they do, but a clear understanding of how to operate through the nuances of that submarket. I'll give you an example. We owned a property in Little Rock, but it wasn't Little Rock. It was North Little Rock, which in this case was on the other side of the train tracks. It was a little different submarket. And we had a property manager managing that property who was born and raised in North Little Rock. She understood the tempo, the drumbeat of that submarket, and that property was a rock star property that performed extremely well because of her ability to be connected with that demographic. And that's the key there. That person at the desk, as Mike already alluded to, is not behind the desk. They're out in front of the desk, connecting with the leads that come in, connecting with the local community. And they go out and they establish relationships with the local community to build those bridges for people to have a place to want to go and live. So again, going back to the question, the key is to understand the property at a hyper local level. And the question is, does a property management company understand that from their perspective?
Well, thank you for that, Ivan. That's helpful, and Mike, I appreciate that as well. Hopping right on to the next one is the question of what is the ratio between on-site staff and the number of units? We're always trying to shoot for operational excellence, right? And you don't want to take a Band-Aid approach and have like a skeleton crew, but you want to have the right people in the right positions doing the right job. So what is that sweet spot ratio to ensure operational effectiveness, but not having that skeleton crew? And does that vary based on the asset type, if it caters to a certain tenant base, etc.?
I think this is a good question for Mike. I'll just chime in real quick. I'd like to hear Mike's perspective as well. But from an asset management operator ownership standpoint, we are thinking about this. Make sure we have the proper type of manning, experience of manning as well, depending on what's going on with the property. Some properties you get have a lot of hair, maybe a lot of deferred maintenance, maybe a total cleanup demographic re-tenanting process you have to go through. We don't want, in that scenario, you don't want to be understaffed. You probably want to be a little bit overstaffed because there's a lot of things going on, a lot of moving parts in that first year as you turn the property around. And plus, there's a whole construction piece that we're executing. So you need to make sure we have experienced managers on site to be able to execute and go through all those various steps to turn that property around. When it comes to the balance, absolutely, right? You want to have, and Mike will chime in on the ratio in the threshold, but anywhere around above 7,500 units, want to have at least two managers, someone managing and then a leasing agent. So someone that can handle with the collections and someone that can handle it with the leases, and then at least two maintenance people, and understand the experience level of those maintenance people as well. It's key. Do they have HVAC certification? Do they have plumbing, electrical certification capabilities? The more you can keep things in-house, of course, is the more you can save on costs, right? But then you need to understand, again, how much hair is on the property, because if there's a lot of work orders, a lot of deferred maintenance, and a lot of rehab that needs to get done, maybe you'll plus up a little bit on the management staff side until you get through that value add process where you finish rehabbing the property, finish re-tenanting, then you can scale back and lean down on your staffing.
Well, kind of piggybacking on what you said, our rule of thumb has always been for every 100 units, you have one maintenance person and one person in the office. But again, from what Ivan said, depends on the property. We have some properties that can operate less than that, some that have to operate with more staff because, we might hire a painter on site to, cut down on the renovation costs. We can have another maintenance person taking care of some of the smaller items that a contractor would charge us an arm and a leg for. If we are trying to re-tenant the property because, we've improved the property, none of these tenants or most of them are not going to qualify based off the new rental amounts, you're going to need extra leasing staff. But exactly what Ivan said is it just depends on the property. Every property is a little bit different.
Well, thank you for that, guys. We're going to keep moving right along then. So the next question that was on the docket for us was, if the property management company has a construction arm, and what other services do they potentially provide? Can they complete things like due diligence and underwriting on other area properties? I think this is based on, are we looking at a property management company from a true partnership perspective where we can increase our base in that particular market? Is how I'm looking at these questions here.
Right. Answer the last question there. Can they complete due diligence underwriting on other area opportunities? We want the property management. As Mike said, this is a relationship, right? And so we want them to come into an opportunity from the beginning. They have to have as much clarity of the opportunity as we do, and we have to be in sync on what is that opportunity and how we're going to execute upon that. So yes, they're going to be part of the underwriting process. When we present an opportunity to Mike, he's going to give us his thoughts and his underwriting performance, so to see if it makes sense. from due diligence, absolutely. They're there on site during due diligence day. They're shaking everything loose just as much as we are and making sure we understand not only from an operational standpoint what is going on with the lease audit, as well as from a physical standpoint what is going on with the building with the physical inspection. So absolutely, those things are important. With the construction arm piece, I've experienced where property management companies do provide construction services. They may charge an additional fee, they may not. Just kind of depends on the level of service needed. However, I have experienced property management companies that want nothing to do with the construction piece. Make sure you understand the implications of that, especially if you're taking on an asset that has a huge value add component. If they do not provide construction services or want an arm's length distance from that, then how you're actually going to execute that rehab plan? Is it something where you're going to have to resurrect your own construction company from the ground and implement? Or are you going to have to, that's pretty much it. I mean, or else it's not going to get done. So got to make sure you, and then ask them the questions, you know. And for us, not only with Mike's team, but a team down in Dallas, we went to the corporate office, and we always do this too. We always go to the corporate office. We meet every single person, every single department. We have a face-to-face, and we understand how they do operations. So in terms of construction, company down in Dallas, they have a construction person sitting in the corporate seat and overseeing all projects. And then from that, you know, how integrated are they with the vendors and the vendor community? Can they actually execute and get things done in a timely fashion? For the Dallas properties, because they had a very strong construction arm, when that ice storm hit during when was that? 2020, the ice storm hit that took down 3 of our properties, and that was on top of COVID. We quickly got those properties back online and rehab because of the vertically integrated construction arm that they have with their company. But Mike, any other insight on that?
Oh yeah, the insight that I have is that when we're going through the due diligence, it allows us to do our due diligence and saying, hey, what are we getting ourselves into as the management company? What are the problems that we see? If we see a lot of problems with the leases, or as we're going through the units, we see problems, physical conditions. We want to make sure that the investors are actually looking into, fixing some of these issues. What are their plans, and can we make the deal? I can tell you this: I have killed a lot of dreams on some properties because I said no, just stay away from that property because of my knowledge of different markets. I always tell our investors this: you send me the trailing 12 in rent roll, you tell me what you're going to do, I'm going to create my own budget, and then I'm going to send it to you, and you tell me what you did with your budget. I don't want to see your budget until I do my budget, and let's reconcile the two. Why do you think you're going to be lower? Why am I going to be higher? I like playing that or having that exercise with the development team, just so we can really say, okay, we're good with these numbers. When it comes to our construction arm, we have a construction arm, but we really leave it to our clients to decide whether they want to use it or not. And again, we have a fee. Almost every management company who has a construction arm is going to charge a fee because we got to pay those salaries, for all that time. But again, what I was saying, we're partners in this. We've got to work together. We got to know what the goals are. And I can tell you this many times. I've had our clients call us and say, hey, the broker said this is a really great deal. I'm like, no, because I sold that property 5 years ago and I know all the problems, so stay away. So.
Absolutely. That's why you want a property management company part of the underwriting due diligence process, hands down, right?
Yeah. Well said, guys. Well said. There was a follow-up question that came into it, and so it ties to how would you guys execute the construction management components between the property management company and the sponsorship team? I guess that might be project dependent upon if that project management company has those construction related services like Mike does, and a property management company that doesn't have it. But do you guys have any other commentary in regards to that type of question?
I mean, that's kind of how we're executing right now. And with a couple of projects we have with Mike, we resurrected our own or created our own vertically integrated construction management company, more or less, and overseeing a lot of the processes. Not that we don't have faith in anyone else's ability to execute. And the property I have elsewhere is kind of out of need and necessity. But now that I've gone through that process, I like it because we get to manage the process, oversee the process, and not put our hands in a third party, not property management company, but you can bring in a third party construction company. What are their incentives at the end of the day? What are their interests, I should say? When you go in-house, of course, your interests are vertically aligned, and it's not just about the paycheck. And you can make sure you execute in a more timely fashion. So then if you do that, then you have to create good communication, lines of communication to ensure that you stay in sync between the construction company and the property management company. One example would be what units are rent ready, what units are not. There may be units sitting or 2 or 3 sitting at a property that are rent ready, but the property management company is not aware of it. So they're not marketing the property or leasing it, which is hurting your physical occupancy, as one example. But if you have communication processes or meeting process to ensure that information is properly transferred and understood, then you can create some very, very efficient processes that will bottom line affect your overall bottom line and help improve your revenue in a more timely fashion.
Well, to kind of piggyback on that, I think it's been a great learning experience for your team on the construction management side. And what you're really learning is about supply chain issues, having those relationships with those vendors and contractors. And I think it's been a great exercise for you. Luckily, our regional manager, Lauren, she's been with you guys, working with you, helping you guys out. And that's where, again, I keep on bringing up making sure that property management company is a partner with you, because they can make or break a deal just like you guys can make or break a deal. And just having everyone work together, because there has to be that line of communication with the management team on site and also at corporate.
Absolutely. And that relationship piece, I think I saw another question, Dan, about relationship. I do want to touch on that here in a minute, but let's come back to that. If you got another question, we can get to
Sure. Yeah, this one, the next one that's coming up, it's shifting gears a bit. And it's more, as I read through it, it seems to be more of a bandwidth question of you don't want people stretched too thin. So the question that came in was, how many assets does the regional manager oversee? Is there a magic number on total assets to manage before you see a drop in performance? So you want to be operating at 90% operational excellence, so you still have 10% of bandwidth, or do you want to be at 110% and have your people stretched too thin? That's kind of the question of what is that magic number.
Again, it goes back.
I'll just take this one.
Go for it, Mike.
To be honest with you. Our rule of thumb that we try to do is each regional manager cannot have more than 1,000 units. Now, I will tell you this, that I have some regional managers that have 600 units, 700 units. I've got others that have 1,500 plus. But again, like those 1,500 units plus ones, they may have 4 properties that are 350 units each. So it just depends on the bandwidth. Luckily, we have a director of property management. We have a CFO that really watches over the performance of not just the regional managers, but also the vice presidents. And we really track to see, is there a breakdown? We try to jump in before there is a breakdown. But we try to keep everyone less than 1,000, each regional manager with less than 1,000 units. And we also want to make sure that those regional managers have enough time to visit the property, be on site, as opposed to working behind or managing behind a computer screen like you see a lot of companies do. Now, I will tell you this, some of my competitors, they are running one regional manager and they're running 2,000 units consistently. And you definitely see a difference in the customer service, the response time, and also their knowledge of the property when you get over 1,000 units. And that's something that we've just learned.
Absolutely. I would agree with that as well, Mike. But this question here is something I'm very keen on understanding before we go into a relationship with a property management company. Correct. It's all about bandwidth. There is so much stuff that goes on with managing a property, not only definitely on the property management side, but also on the ownership side. And it is about bandwidth and the ratio of that. 1,000 units is a good starting point to understand that. But some things that I'm looking at as well is how spread apart are the assets that the region are managing? Are they in different states? Just having to get in an airplane and fly to manage another property and then fly back, that creates a lot of churn in the system, the process. And I've experienced that with other regionals, other companies, where we have a regional has managing asset in one state, then they fly all the way up to the Northwest, all the way down to California, and then back to my property. And then they get to your property and they're jet lagged, and then it takes 2-3 days to get caught up to handle one little thing, right? And that has a huge impact, the ability to execute. Can I control that? I can bring it up. I can't really control it necessarily, but ask that question up front and understand that. How spread apart are the properties that they're managing? The more local, the better. For me, I have found anywhere from 5 to 8 properties is kind of, as an ownership, that's just my personal opinion. No more than 8 is where I like to be. I've had some regionals have 10, 12 properties in 2 or 3 states. And as Mike said, they're just not in tune. And given all the activity that goes on, you have to be in tune. You have to be on top of these things for it to perform well.
I mean, I would agree with that. Your particular regional manager, we also look at the ownership structure. How many properties does this owner own, and how many of those do we manage, and can we group them all together? And I can tell you this, I know Lauren, your regional manager, is on your properties quite a bit. Sometimes 100%. I feel like she's the manager sometimes, but
she is.
I mean, she's on proproperties way more than I can tell you other regional managers and other companies would be on their properties.
We get great service and attention from Mike's company. I'm speaking of some other experiences, Mike. But absolutely, we get great attention. It's been a great experience as well, especially on the construction side. Lauren's very, very involved in the day in, day out processes, and out of the ordinary for us, quite honestly.
Well, you're welcome.
Yeah, I'm glad you're able to refer Mike for more business. Hopefully that doesn't get too much bandwidth issues on servicing the properties we're working with them on.
He has a good hiring process, so he'll be able to fill
Yeah, we'll be okay. Don't worry. I've got regional managers that want to join our company. No problem there.
Perfect. There was another question that came out of that from what you guys were just talking about. So the question that came in is, we were just talking about the regional project manager and the on-site manager. And the question is who should the sponsor be interacting with on an ongoing basis? Is it that regional manager with 1,000+ units, or is it that on-site manager? What should that be for that single point of contact?
You first, Mike.
Well, I would prefer owners to actually talk to the regional manager so they know what the owners are looking for. It also, I'm really not into the owners talking directly to the property manager, because sometimes there's a discussion with the regional manager. There's been a change. Regional manager doesn't know about it. They go on site. They're like, what are you doing? Well, I talked to Ivan and he said, we're going to start doing this. It's like, really? Or, what's going on? So I would prefer it happen where it goes to the regional manager and we just kind of filter it down the line. I know that doesn't always happen. But as long as the regional manager is informed of whatever decisions are made between the owner and the manager, I'm fine with it. But again, every company is a little bit different. I know there's a company in Kansas City that is just, they will not let their owners ever talk to the property manager maintenance. They've been trained to make sure that they never talk. So I don't know. Ivan Tariq, what do you guys think?
Well, after spending 20 years in the Air Force, I'm really big on chain of command and understanding why we have chain of command and implementing that, right? You have to go through the regional. The manager doesn't work for us. Works for, or we're not the boss of the manager. The regional is, right? And the regional has authority to get things done, right? At the end of the day. And so that's where the relationship is mainly managed on a day in, day out basis, is working with that regional. And then if you see things across the board between a manager's responsibility and a maintenance person's responsibility, the regional can manage that for you. So I make a point to make sure that we only work with the regional. However, the manager can be involved in the meetings. You know, if you're having a KPI call, you're having some type of planning meeting, the manager's there and part of the process, right? But if you have a task or a thing, I'm not going to give it to the manager and have the regional be out of the loop, as Mike already spoke about. Just a bad way of doing business. Also want to add one voice from ownership standpoint, and Mike, I'm surprised you didn't bring this up. One voice from the ownership team. And I mean, I'm guilty of this as well, where we've had it where multiple voices are interacting with the property management company. It should be one person on the ownership side. So for us, for Mike's properties, we have Shafayette and really his wife, Tezrina. They're working married couple for our Kansas City property. So one voice, though, interacting both on the phone, email, and meetings, that creates line efficiency in the lines of communication.
I 100% agree with that. I recently had to deal with a group that was 4 partners. For almost a year, they argued on every single call between themselves. I finally said, look, we're not going to have these calls anymore unless you guys get one person to be in charge. And now that group has disbanded. They've gone their own separate ways. And I am much happier now.
We can feel your happiness.
And Mike, are they selling that property at a fire sale price? Maybe we should, get in there and grab it.
No, like most sellers, they still remember late 2021, early 2022, where prices were completely ridiculous. And they'd come to me to sell, and I said, you want way too much. So.
All right, well, that's good. Let me hop us to the next question, as we know we're getting closer on time. But this next one that came out, I think it's tied to transparency on how are the bank accounts managed, and does the sponsor have visibility into those accounts? In the same way that we tried to get our investors a live look on a monthly basis to the financials. Why is this important between a property management company and the sponsorship team?
That's a good question for Tariq. He oversees this.
Right. So on the bank account side, we typically have had multiple accounts for each of the property, and we have, held them at a local bank, at a regional bank, and not with one of the national banks. Just customer service at times is much better, much quicker. Ease of getting certain things done, even when we might be traveling and not readily available to be at the bank to fill certain paperwork out and not be there in person, getting around those things, those local relationships matter. But in terms of the bank accounts themselves, we typically would have an account for the operations of the company, where all the rents, all the collections coming in at the property come in, and all the bills get paid out of that. The property management company, whoever is appropriate on their side will have access to it. They are the ones that are writing the checks. We on the asset management side, we have access, visibility to it, and we have actually control on what level of access and visibility we give to the property management company for each one of the accounts. So it's the operations account. There is, of course, the security deposits account, where all the security deposits for each one of the tenants, where they sit. And those, again, the property management company, appropriate staff there has access, visibility to that, to put money in, take money out as needed on an ongoing basis. We on top of those 2 accounts, we actually have a couple of more accounts. We have an account for escrows. Typically, the lender would hold escrows for both taxes and insurance, capex reserves on an ongoing basis. But then there are lenders that do not, that may only hold the capex reserves, may not hold the taxes or insurance. or even if the lender is, we as asset managers, as sponsors, may want to hold some extra on our end on a monthly basis and put that into the escrow account, because those costs, taxes on an annual basis, we have only seen them going up. Insurance on an annual basis, we have only seen that number going up. So having some cushion there, so you don't get hit with a surprise at the end of the year when there may be a larger chunk that the lender may require you to put into escrow, and you may not have the funds readily available. We have then we have an account for distributions where we put money on an ongoing basis that is allocated for distributions to our investors. This is an account that typically the property management company may not have visibility or access to. There is the CapEx account where we will hold any unfinanced rehab dollars that we may have raised as part of the equity raise, and put those segregated from the operations account. There's money, just like any this multifamily is very much like a small business, and money that gets left in the operations account is going to get sucked into the system, and you have no idea where it went. So we don't like to put that money into the operations account until there is a need to move that money over to pay any CapEx related bills. So those are the various accounts that we have. We have typically held them at a bank of our choice, but there are times when a lender or a property management company have strong relationships, or even a requirement to have accounts at a bank, at an institution of their choice, and we have done that as well. Mike, anything from your perspective from the property management side?
Well, from my perspective, is just a suggestion is, if any property management company says that you cannot get online access to the bank account, and you as an owner are not signers on that account, you should probably walk away from that company immediately. We're very much open book. Not only does Tariq and his whole team all have, they set up the bank accounts. They gave us the access that we needed online, and also, being check signers and being able to access the information. But we also gave them, they have access to our Yardi system. They see everything in real time. I think that's really big for investors, so they can see what's going on. They can pull their reports. We have some investors that actually literally log in. I can see when they log in the morning and they just watch things all day, and I can tell when they're leaving work because they shut it down. It's just that I think being open book with your management company is really important. And if they have complete control of all that cash, I've heard so many horror stories where people have come to me and say, Mike, I'm not assigning on the account. They haven't given me any distributions for months. What do I do? I'm like, well, you're not a signer. You got to go get an attorney. I can't help you. But I think it's very important that you as the owner have access somehow to that money in case something bad goes wrong.
Well, thanks for that, guys. Being cognizant of time, we've got 7 minutes left, and we do have a handful of questions to still get through. So I'm going to try and blend a few questions here. So I'm going to pop up a question right now. I'm getting into best practices. So what are some of the best practices in a new acquisition between the project management company and the sponsor?
I'll take that. I want to make sure the property management company has plenty of breathing room to get their arms wrapped around the property before we start getting involved in some of the systems and processes on an ongoing basis, which means it's going to take a little bit for them to get a feel for things, exactly what's going on. So we may not kick off our KPI weekly calls until after 2 or 3, maybe even 4 weeks of them operating the property. And then we kick off weekly calls on an ongoing basis after that. On rehab, there's different schools of thought where we want to be chopping a bit day one, kick off rehab, or again, let's see how the property reacts to our rent bumps as is versus kicking off the rehab. So we like to give breathing room for the rehab, before the rehab kicks off. So again, the property management company can get established and comfortable with the property. Plus, they're going through seeing how their staff is going to react as a new ownership company comes in, a new property management company comes in. A lot of times, Mike can share some color on this. They retain some of the original staff members that were with the previous company, and we want to give them time to react and see how they're going to actually perform and operate under a new regime. And a lot of times they don't make the cut, and so then you have to go and find a replacement, and that takes a little bit of time. So again, we like to give some breathing room before we kick off rehab and take things to the next level.
And I think what Ivan has said is just perfect. I couldn't say it any better. It just you got to get the staff on site to get comfortable with everything, comfortable with our procedures. And also, sometimes there can be a rent bump without doing too much to the property, and we can save that renovation for later on other projects. That's I couldn't say anything better than what he said.
Then, I'm going to skip right ahead because now we're at the 5-minute mark. And there's kind of a follow-up question to this one. And the question is, how long do you give as a sponsorship group that new property management company to stabilize occupancy and begin that upward trend really from a NOI perspective on that new asset before you say, hey, guys, this isn't working. We're going to look to do a property management company shift?
I don't like answering this question with our dedicated property management company on the call. So I don't want to. No.
I'll just start this off. You should give them at least 10, 20 years to get the property turned around.
Okay. Fair enough. It's a relationship business. At the end of the day, there's a lot of considerations that goes into that decision if you want to part ways, if you will. I can say that my rope is getting shorter and shorter the more I do this, because we just understand the longer you let a problem precipitate, the bigger the problem becomes over time. If because originally the relationship is just not strong and it's failing, right? Your gut's going to tell you at the end of the day. Your intuition is going to kind of tell you, like, maybe it's time for a change. But again, with Orion, probably that not sharing any color with what's going on. We're very happy with their ability to perform and execute. Other experiences, hasn't been the same case.
I'll just chime in on that, Dan, that it's going to be very property specific, right? What the condition of the property is, what the target is, what occupancy and condition you're taking it on, and what the plan is. So having given it some time and coming to a mutual understanding and a budget with the property management company on what it would take, but it's going to be very much dependent on the property, the condition, and the business plan.
Well said.
Perfect. All right, well, then we've got 2 questions. We got 3 minutes, so I'm going to ask them pretty much rapid fire for you guys. This first one is, what if you have a management company that is also owned by the investor group's mentor? And I think you guys might have an idea. But just a quick one on that one, as then there's another question as a follow-up.
Right. So I'll just address that. It's, that relationship shouldn't matter. We're going to do our diligence just like we would do for any other property management company. There may be an opportunity to actually get better access, visibility to people within the property management company because of the relationship that might be there. But the diligence has to be the same, whether there is that relationship or not.
And that's perfect. For the sake of time, I'm going to hop to the very last one. I won't even pop it up on the screen. But it's another best practices question. This time it's on the corporate and management level and how the sponsor and the property management team should interact. Any other additional insights on what you guys would recommend there for best practices?
Well, it starts with the top down. I mean, we have the president owner of Orion Property Group on the call today, and it should be a sign, and that's where the relationship starts and begins. And keep fostering that relationship and find ways to interact and work together face to face. So, for example, when we set our yearly budgets, we do this, the final version in person. right? We'll have a budget planning day, and then we go get lunch together and have a meal together, right? And then whatever else activities may come about after that. So keep those corporate relationships at that level very healthy as an ownership team. It pays huge dividends when you continue to foster and build those relationships along the way.
I mean, I would have to agree. As president and principal of the Orion Property Group, the buck stops with me, and so everyone on this call understands that if something's not working out, it's a quick email, text message, or phone call to me, and I'm pretty good at responding when I can. So I'm always available. I mean, everyone knows that they can go above the regional manager, they can go to the director of property management, or they can go to me. So it's good to have that openness and know that there's someone else you can talk to. Now, after me, there's nobody, but at that point, we'll work things out.
Well, perfect, guys. Hey, so Mike, I appreciate you going through this with us. We are at time, so we did have a few more questions come in, but we're going to just respond back to those individuals via email. Thank you, everyone, for sending those questions in advance. It helps us actually be more thoughtful in our responses to you. So please keep doing that. Just the one final call to action, and I think you guys have probably seen this by now, but we do have a book on Amazon. We don't want you to actually buy it on Amazon. We recommend instead you just scan the QR code that you see on the screen, and you can download a free copy of it. It's a less sexy version because it's the pre-published version, but it has all the same content that you need from an educational material standpoint. So with that, any closing comments from Tariq, Ivan, Mike?
No, it's again, it's just a relationship business. It's a partnership between property management company and the ownership group. Continue to foster that relationship as well as down to the tactical things that need to get done to execute and operate these properties.
And I'll just say that of all the other relationships that you have in this business, the lender, the broker, the attorney, all of those disappear once you sign that dotted line and the deal closes. The ones that are left standing for the rest of the journey are you as asset manager and the property management company. And that is the longest relationship that you are going to have in this venture. And that is the one where a lot of time, effort, energy needs to go into.
And what I would, my final thought is make sure you have a good relationship with that property management company. If you want to kind of vet one, talk to the agent who is selling you that property. If they recommend a management company, that's probably a good sign because they want to make sure that you come back and buy another property from them. So they're not going to send you to a bad management company. And I love when my competitors refer me. So it's great.
Perfect. Well, hey, guys, I appreciate it so much. Thank you, everybody, for making the time. Thank you, everybody, that was able to attend live. We will also have this recorded and sent out for people that were unable to, unfortunately, make it during this live session. But until next time, keep in touch. We'll see you guys in December. Thanks so much.
Thank you.
Thank you.
Good night.